you may not be a winner. You better be very careful about how you bear the risks, understand the risk. And so if you look at the financial services world, these spectacular blowups. Spectacular blowups. So I'm going to give you 5. Okay? Credit Suisse, twice, was bailed out by its parent. Shearson Lehman, bailed out by its parent. Shearson Lehman lost $1 billion, by the way, more than it earned in its whole history. And this was like 1990. Kidder Peabody is basically liquidated into Payne Weber. Drexel Burnham and Salomon Brothers, we kind of bailed out when we bought it. 5 major investment banks. Now, here's the amazing thing about that, folks. That was in the greatest bull market of all time. That was with all the brains, all the money, all the arrogance, okay? And they went bankrupt anyway. Think about it. It will happen again. And it is amazing to me, and you see, but it's not just in Fed, it happens all these things. And so, like, I don't believe, when a lot of people talk about we were hit by the perfect storm, we had this terrorist act, we had this bubble, we had this war, who would have known? Listen, I've been like conscious since I was a kid, but I started reading the papers all the time, like in the early 1970s. Since 1970, we've had multiple wars, multiple terrorist attacks. Matter of fact, the World Trade Center was bombed twice. Okay, we've had multiple bursts, market bursts, 25% in 1987, the mini crash in 91. We've had 2 real estate crises. Argentina surprised everyone a couple years ago by going bankrupt. It was the 3rd time it went bankrupt in that time period. We've had multiple oil crises, multiple gold crises. We've had Sumitomo. We've had Barings. We've had what happened in Japan. We've had the 3 AAA banks in Texas out of business. We had the savings and loan crisis. What are they talking about being so surprised? So like when you all go to work, the next 25 years, it holds the same. Don't be that surprised. And it's hard to somebody figure out where it's going to happen, but like big financial companies, any company, you've got to be prepared. Like you can't over leverage up, you can't pull your eggs in one basket. If you look at the mistakes that were made, they didn't have the right controls, they had people in jobs that they didn't trust, and so all these things will separate the winners from the losers, and they have nothing to do with margins of the business. They just are fundamental flaws that companies allow to take place inside the company. And so when I look at people hear me talk about a fortress balance sheet and surviving the bad times, I'm not kidding. When we look at interest rate exposures, credit exposures, derivative exposures, operational exposures, I'm talking about our survival. I'm not worried about the interest rate. If people, it's funny what I'm about to say, but if the Fed moves interest rates 50 basis points, I don't care. It means absolutely nothing to us, our company. It's a funny, we'll probably lose money here and make money there, and we have to hedge stuff and move, but that isn't what's going to make us successful or not. And being prepared for a 500 basis point move. Who is the person who picked the last inflection point? No one knows. No one ever picked a big inflection point. When I went to work, prime was at 21.5. Who thought LIBOR would go to 1? And I can go issue after issue.